Hi Francis, how are you again? So many of my regular friends here. Uh, okay. Okay, let's get started. Hey, good afternoon everyone and welcome back to the SG Tech regular webinar series called The Isolation Economy. Welcome. My name is Ivan. Thank you so much for joining us today. To all our friends here tuning in, it's such a great pleasure to always be able to share with you information about what's happening with COVID-19. So today, our sharing session is about the Fortitude Budget and the start of a new normal in the isolation economy. We really want to talk about what the end of circuit breaker means for all of you SMEs in Singapore. So once again, especially today, since it's a very accounting heavy session, we always want to say that the information for this webinar is really meant for education and learning purpose alone. I believe that a lot of times, please seek your own independent legal and accounting advice, especially since we're talking about the budget. I have made mistake in this budget. In case there are issues, please always feel free to email me. We try to be as accurate as possible, but because the budget is always, information is always changing, we do apologize in advance, but always feel free to message us if you think that there are some issues involved. All right, so seek your own independent advice before taking your business risks. Now, my name is Ivan. This has been the third month we've been doing this. I'm a co-ops counselor with SG Tech. If you need me, my social and my email is here. Welcome you guys to message me. I do have a lot of emails that is not read yet, so I do apologize if I've not come to your question yet. So why are we doing this? What is SG Tech? SG Tech is the premier trade association for the tech industry in Singapore. We represent more than 900 companies in the tech industry, from startups to SMEs to even the big technology companies. And we thought that, since we are all isolated in and we cannot do our physical event, this is a great opportunity for us to engage our members and new members alike. So we have bundled everything called the isolation economy. Now, this is a community effort to support SMEs and startups in Singapore. We have two things. We have the webinar series, which we are having right now, and the toolbox series. So we have upcoming webinars. We have planned webinars every Wednesday or Thursday, all the way till June. Here are some of the exciting ones coming up. You can always sign up on isolation.sg. And as well, we have spent the last few months, of doing this to curate videos of companies that are members providing you different solutions for SMEs. So do check them out. They are really great solutions. I think some of them might be very useful for a lot of us SME in the market. So as always, after this webinar is over, you guys will get the survey link. I will remind you guys again, helping us do this survey is so important. By doing this survey, we are able to provide feedback on the policy. We are able to provide feedback to the government agency and basically help us do a better webinar. So let's talk about the webinar today. Now, the slides used for today's webinar have already been uploaded to isolation.sg. Click on past webinar. You will be able to find it there. As well, a link will be circulated. The recording, give us 2-3 hours to process it. It takes some time to process and cut the recording. And Q&A. As with all budget webinar, usually there will be a ton of question and answers. I'm not able to read the message log, so please, if you have a question, help me ask it in the Q&A function on Zoom. So let's talk about today's agenda. We have 4 things that I would like to talk to you guys about. First thing first, I would like to give you guys a case study about the global opening happening right now. Number 2, all of us here, majority of us here are fellow Singaporeans and Singaporean PR. We want to talk about the budget and the economy, the details of the Fortitude budgets, and most importantly for SME, 3 realities of this new normal that we are going to encounter next week after this end of 8 weeks of circuit breaker. All right. Now, if you want to know about all the other policies about the budget, please go to isolation.sg and download the previous slide, which contain all the other budget measures. Today, our slide and my sharing, due to time, really talks about the 4 or 5 key policies that was involved and introduced in the Fortitude budget. Okay, let's start. So, we are Singaporeans and we love benchmarking ourselves, right? We love to see how other countries are doing and what can we do. So I've asked a few of my friends at the consulting firm to help me pull together a few research into a global reopening and see whether, by all means, every country will follow their own trajectory to opening the economy. So this is not just one way of opening, but this gives us a sense about how the global economy will together open the economy. Now, first thing first, I'm going to move my video all the way here. Let's talk about online usage globally. Now, I think online usage globally has tremendously increased. This will factor in later when I talk about the new normal. Now, consumers have never spent more time online than ever before. And the great news is this, a lot of the time that consumers are spending online is spent on communicating and reading. Now, you can see that the increase here is tremendous. Communicating, texting, talking online, reading news, social media, and of course, videos itself. These are the big increase. I think a lot of tauges will be a bit concerned that the on-time spent on working actually did not increase that much. In fact, I think a lot of people, and I think a lot of Singaporean SME will report that they feel that productivity has decreased in the online economy and they cannot wait to go back to office. Now, this is very concerning because what we are seeing is a flip side model whereby consumers are very okay without work to spend time online, but yet when it comes to actual working, online don't seem to be a mean of operation around the world. In fact, it's a decrease in operation. So one thing to think about as you go online and as we go back to the new normal is that, are we going to experience the fact that are we going to spend the same amount of time online consuming content, or are we going to spend the time digitally working? Something for a lot of SME owners to be concerned about. Now, confidence. Confidence affects everything. A lot of times, the economy today, as we discussed, I think Singaporeans are generally speaking a bit neutral on the economy, but confidence affects the rebound time for an economy. And you're going to see two different patterns. Now, the emerging markets, China and India, very optimistic. They are seeing that the economy will rebound in 2-3 months. By August, September this year, bam, the economy will be back to normal. Now, USA is an outlier. Now, in the developed world, Germany, UK, France, Korea, the pessimism is very, very high. They believe uncertainty is high and pessimism is high. One outstanding factor, and I think this is why the American market is always very interesting, is that the Americans is a perpetual optimistic country. Even with the current US political situation, consumer confidence there remains high and strong, and they expect a rebound. And this will affect. So if you guys are SMEs selling to this key market, take note of this. Consumer patterns affect how purchases are happening, and the higher the optimism, the higher consumer will be willing to spend going forward. Okay, something to see that is really seeing a double trend in the world. Now, let's talk about Europeans and let's talk about household spending. Now, I think across the board, where spending is changing, is that everything that is discretionary in nature have kind of dropped or stay stagnant. All right, discretionary being clothes, alcohol, skincare, cosmetic, fitness, wellness, that stayed. What is increasing in the discretionary category of entertainment, books, and Netflix is something that consumers around the world are craving for. And of course, essential goods, food and household products. These are where we're seeing exponential growth as a lot of economy go back to what I call the norm. Now, what does it mean is that two things. Now, if you are a glass half full person, you would think that in a very short run time, when consumer economy goes back, you will expect something called a revenge spending, where consumers feel that, hey, I've never bought a clothes for so long, time to buy something. That's a glass half full person. Now, if you are a glass half empty person, then you will expect a negative curve, right? That this is just the start of a prolonged down cycle in discretionary income. I'm not here to color any expectations. I'm just here to provide these numbers to show where the data is showing us. While in terms of some of our friends in the tourism industry, which is one of the most badly affected. Now, globally speaking, intra-region tourism is probably going to be the first to pick up. By no means are we expecting any situation where tourism will resume in the next 1 year. But domestic tourism probably. And in the case of Singapore, I think where you will see a lot of happening will be region-specific tourism to certain regions such as, say, Hong Kong, Australia, and New Zealand. We are very unfortunate in the situation where we do not have a huge domestic market. If you're a hotel or you're a tour agency, there is only so much the 3.5 million native Singaporean and the 2.5 million workers that work in Singapore can do homestay or can do domestic tourism. So a lot of times we might want to look at which country have the same level of cure rate as us, and that will be probably where the rebound will happen in tourism sector itself. And last but not least, companies that have not already digitalized their operation. I want to point out that COVID-19 is the situation where consumers pick up the most number of new digital activities. And China has shown us, this number came from April, where people are big into meal kit, groceries, restaurant, online learning. This is going to affect consumer trend in the long term. They are going to keep using this because of fear. A lot of people are still very fearful of going out due to the COVID-19 virus and no vaccine. These are going to affect long-term trends. So if you do not have this, do not expect the situation on 2nd June that, hey, everything will go back to normal. It's not going to happen. A digital present, a digital activity is going to affect this trend for a very, very long time. Okay? So the thing is this, one prediction that we're going to probably see is that big companies with the liquidity to invest are going to take market share away from SME. This is the core reality of the world, right? Companies are spending so much money now building new online habits for their consumer. They are building online habits for them to think about food, about delivery, about meal kit. So SMEs today, you have to take advantage of all the grants available so that you have the opportunity to at least compete in this new reality. Else, what we're going to see in a very dystopian future, post-COVID-19 reopening, whereby a few large companies is probably going to dominate a lot of the sector just because they got liquidity to invest. So do think of it, SMEs are the main driver of growth in terms of human resource, in terms of hiring in Singapore. Think about helping yourself digitalize. All right. So let's talk about the overview of the Singapore economy and the budget right now. The first quarter this year, we came out with a year-on-year negative growth of 2.2%. Today, we're expecting a -4 to -7%. This is a massive retardation. It's killing away 3 years of collective growth in the economy. The economy will shrink. The economy will be the worst since independence, and it's going to be a tough time for us. So in January, when I presented these numbers, you can see that the turn of government, even at the worst peak of the coronavirus in January, we still expected a surplus, right? You can see how the numbers has changed so far. This is going to be the largest deficit in the history of the Singapore government, right? A 74.3 billion deficit, taking away a total of 92.9 billion, or 20% of the economy, just to fight COVID-19. Some other ways of looking at this number is that the American economy, through their initial $2 trillion investment to support jobs, is just 10% of the economy. Singapore effectively is doubling down that we need 20% support to keep our economy growing. Or another way of looking at it, if you take this $22.9 billion supported fund for COVID-19, essentially every single working Singaporean paying taxes, the cost to us is $32,000 per individual. By all no means, this is a tremendous amount. This on average is a median income of an average Singaporean for a year. And this is what we're committing to support the economy in COVID-19 itself. If we stack all the support together, the Unity, Resilience, Solidarity, and Fortitude Budget, we are seeing that we're taking $52 billion from the reserve, an unprecedented amount. Other countries like the Bank of Japan and the American market, they are taking all of this through additional bank loans. I think Singapore is very lucky to be able to have such a big reserve for this. And I also want to point out that out of the 52 billion, Minister Heng Swee Keat has taken 13 billion as a contingency fund. So he doesn't have to go through the whole process of asking President for ascendancy to basically take future reserve. Now, how much is 13 billion? That means that the Minister of Finance have 4 months of JSS at 75% to play around to manage the economy. So assuming by August the economy don't improve, something great to know is that he has the ability to marshal another 4 additional months of JSS to support the economy. Massive amount of foresight there, massive amount of looking in the future, such a great situation. And as Singaporeans, we are always questioning, and of course this starts the debate again, where are the reserve? The reserve in Singapore, we have no time to go through an academic exercise of this, but the Singapore government reserve are managed by are basically divided into 3. The first one is the Monetary Authority of Singapore, the foreign currency reserve. That number is a known number. They publish this number every month. As of last month, we have 600 or 400 billion of foreign currency reserve in US dollar. Temasek Holdings is our second pool of reserve. And of course, the question mark that we always ask, and this is why we do not know our full reserve, is GIC. The reason being that is by knowing the full reserve, it provides the ability to attack the market so that we do not know this. It helps us in protecting the economy. So collectively speaking, some analysts expect the reserve at about 800 billion. So taking 57 billion, that's about 5% of the reserve itself. So this is how the government reserve works. So even before I want to go through the budget, I also want to talk about some things in case you guys are wondering. Government policies around the world are concentrated on two. First thing first, usually we talk about monetary policy. Now, monetary policy basically is to reduce interest rates so that we encourage banks to borrow and basically to increase the spending in the economy. By borrowing cheaper money, companies like yourself, SMEs, will make more investment decisions. This has traditionally been one way we fight a recession. The second way, which the Singapore government has been doing, is a fiscal policy, and that's called direct G or direct cash investment into the market. Basically, it's to provide liquidity or cash to consumer and businesses so that they spend and create a multiplier effect. Now, one thing to note in the COVID-19, and as an economist, is really fascinating, is that that we are reaching and testing the limit of every single traditional policy of the government worldwide. The monetary policy is one example. We are now encouraging negative interest rate, whereby you pay people to borrow money. That's quite insane. It's a topsy-turvy world. Not all countries can practice this. Singapore cannot do monetary policy because the Singapore dollar is what we call a free float currency. So we cannot do monetary policy. Now, the fiscal policy side of it is where Singapore has always traditionally been used to push up. But I want to point out that for those of you who have been in my earlier webinar, and the situation here is that we are going through what I call a cyclical retardation of associated demand and associated supply that is just free-falling non-stop backstream. Now, no amount of fiscal policy, as we are seeing now, is able to encourage consumer because the whole free market economy has basically stopped working. So this is a very scary reality, not to basically put all our minds at fear, but it is what it is today. And this is why we also have to be very prudent when we look at how businesses will react. And I always ask SME today, do not just think that the Singapore government can continue supporting job support scheme in the future. Because apart from the fact that although we have the reserve, the effect of providing this physical amount has become very, is testing the limit, and it will no longer be effective. We have not been able, even with 20% of capital injection into the market, push back our AS and AD curve back to the normal. Very scary time indeed. Okay, so let's now go through why you are here for, which is about the Fortitude Budget. Okay, the Fortitude Budget is a very complex budget, for lack of better words. I think Minister tried his best to put it in sequential order. I have read it through a few times, and by all no means this is a correct interpretation of it, but I try to bench it based on what Minister has announced as close as possible. Any point of time, if I have a mistake, please let me know. Now, the kingpin of every single the Singapore government budget through Unity, Resilient, and Fortitude now has been the job support scheme. Basically subsidizing employee salary so that employees will keep them on payroll. Has it been effective? Very. It's a very, very effective policy. The US is the only country running counter to this JSS scheme. The United Kingdom is having their own version of payroll support. The United States government choose to do basically unemployment support. So you can see that the unemployment rate in the US has now crossed 25% because it's easier for employers to lay off workers than to keep them on payroll. It's a complete different view on things, but I've been a strong advocate of the job support scheme, and it has been proven very effective into retaining a lot of workers. Now, where it is confusing now is the fact that it has been pushed in with multiple reiteration over time. So let us get it straight now. Let's just talk on the JSS for the Fortitude Budget. Now, Minister for the Fortitude Budget has announced an extension of 1 month. I will give you guys a work example. So JSS, ignoring the previous one, let's just imagine that JSS is now extended by an additional 1 month to 10 months. All employers will get 10 months of job support scheme. Okay, the confusing part comes into what's the percentage and how is the percentage going. Okay, so let us tell you about that in a short while. Let's talk about payout dates. So you guys should already receive 2 payouts. The first payout was April 2020, where Minister gave you October to December plus the April payout. The second payout was a cash advancement for the month of May. It was paid out about 2 weeks ago. You should have received this. The next payout will be in July, for the period of February to April, and in October for May to August. There will be calculation adjustment as well, because you can see that there are double April. So let's say you are increasing your worker salary or decreasing your worker salary, IRAS will do automatic calculation to adjust all the situation itself. I think don't have to worry about it too much. Just make sure that the amount that you collect here equals to the amount that you pay your salary payroll. These are all based on CPF records, and there should not be any mistake. Now, let's talk about the tiers. Okay, so this is where it gets really confusing. Let's talk about the different tier structure and how it affects after opening on 2nd June. If you're in the aviation, tourism space, you will get 75% support for the period of JSS. That is 10 months. Now, for the built environment, that's a construction industry. You get 75% support for June to August, or the moment that you can start your renovation again. For companies in food, retail, arts, land, and marine, you're going to get 50% tier support starting from June. And for all others, you're going to get 25% support. Now, the best way to visualize this is to work it out in an example. Okay, so here we have 10 months. If you guys are traditional office SME, take note that you get 75% support for the month of April and May, and you continue getting 25% support for the rest. Now, some of my friends here are in the F&B space. That's the same. You guys get F&B 50, 50, 50, 75, 75, 50, 50, 50, 50. All right, that is how the structure will work. You get 2 months in between of 75% support, and the rest going back to your base tier. All right, this is one of the most confusing calculation to possible in calculation with the JSS support. Okay, and I hope by providing you this example, you guys get clarity into how much you should be receiving from the government of Singapore. Okay, now, of course, who do not qualify? Sole proprietor, partners in a partnership, and self-employed individuals such as taxi drivers and property agents. Those who will be getting under the SEP or self-employed professional support itself. Now, I want to take note that directors of the company are now qualifying. So if you are both the shareholder and the director of company, you qualify for JSS. But your income, sorry, there's a wrong sign here, I'll update it later, must be below $100,000 for the financial year 2019. That means that based on your last year financial tax account, what you report, it must be below 100,000. If you have net income above 100,000, you still do not qualify for job support scheme. All right, this is the first pillar of the support. Now, the second pillar is rental. I'm going to talk about rental for government properties and rental for non-government properties in 2 parts. Let's talk about rental. So rental, if you guys are a hawker, your rent support now is up to 5 months. If you are renting properties, these are non-residential commercial properties from HDB and URA, you get 4 months. And if your other agencies such as SLA and other smaller plot of land in other government properties, you should be expecting 2 months. This is very easy. The relevant agency will send you the notice of rental support. Let's talk about non-residential for private. The government has announced 3 different schemes for this, with the third being the new bill that is not formally passed yet. Let's start with the first one. The first one is the property tax rebate. The property tax rebate has no change, okay? If you are hotel, tourist site, shops, restaurant, qualifying commercial property, your landlord gets 100% property tax rebate based on annual value that they will pass down to the tenant. For those of you in non-residential property, that is 30% tax rebate, okay? Now, this should equate to about 1.2 months of your rental income, depending. But rental is a commercial, it's basically still a commercial negotiation. So this is how it's calculated. Okay. Now, the new thing the government has announced is this. They're creating a new fund to give funds to landlord to help SME tenant. You are a SME tenant if your revenue is not more than 100 mil. That's the only qualifying criteria. Okay. So everybody has been talking about 2 months. I want to clarify this. Majority of us will not get 2 months. Okay, it's about 2 months because rental is still a commercial decision. The government is providing support for qualifying commercial property of 0.8 months of rent calculated based on annual value. And for non-residential, 0.6 months of rent calculated on annual value. This is very, very complex. Basically, the government is saying that giving you the property tax rebate plus this new additional cash grant to your landlord should equate to 2 months for commercial property and 1 month for non-residential, non-commercial property. Okay, it should equate about 2 months. At the end of the day, the government mandates the landlord to pass all of this down to you. Do take note that until this point in time, right, this two relief, right, the landlord is not coming out a single cent. Your landlord is not losing a single cent. Your landlord basically is not paying property tax he's giving to you, and the landlord is getting a further cash grant to pass it down to you by not charging you rent. There is no cost to your landlord. So I encourage you guys now to call your landlord and open a conversation. Annual value and all is very hard to calculate. The easiest solution is this. Why worry about what your landlord pays in annual taxation? Just negotiate for 2 months of free rental for your property, and that will be a very good equalizer already. All right. Give I mean, at the end of the day, there will be plus and minus here, but to make it simple and to not hassle over what's the annual value of property, which you can actually assess on IRAS website, negotiate a landlord, talk to them about 2 months. Now, there is no period of time where they must mandate when to apply this 2 months. You can say, okay, for the month of April and May, I have not paid you rent. Let's use this 2 months. Or maybe I already pay you rent for April and May. Let's use it for June, July. It's really up to you to negotiate with your landlord. But by regulation, the landlord must pass down this benefit. This benefit does not equate to 2 months. The law mandates he pass down the property tax rebate and the annual value 0.8 months rebate. Okay, this is a very, very confusing number, and this is why here gets confusing. Okay, I will take your questions later. Now, let's talk about let's talk about this. How the money will be given. So the money, which is this 0.8 or 0.64 of your rental month, will be paid out to your landlord via IRAS somewhere after end June 2020. The schematics of it is still being worked out of this scheme itself. So I suggest you guys speak to your landlord to talk about how and which month you want to apply the rental relief. Okay? So the new thing that Minister made one paragraph announcement is that the Ministry of Law through Minister S. Shanmugaratnam will announce a new additional rental relief. These are for people who have the most significant drop in, most significant drop in revenue, okay? Now, this is very, very confusing. First thing first, he announced a new bill without giving us a date for when this bill will pass and what represents significant rental drop, okay? My recommendation is this. 2 months is already confirmed. The previous policy, 2 months. My recommendation is we wait to see this bill, and then you can open up another conversation, especially if your revenue is very affected. This point in time, I want to point out that he used a few keywords. The cost will be equally borne by the government and the landlord. So, as of the first 2 months of free rental, the landlord is basically not bearing any cost. There is no cost. The government is actually not collecting income from property tax and giving a cash grant. This additional 2 months of rental support, or 3 months if you're industrial property, that's where it's going to probably be split half-half. Probably 1 month of no income for the landlord and 1 month of no income paid by the government of Singapore as a compensation for the landlord. This is going to be tricky. A lot of your landlords want to, of course, collect income, right? He's basically going to give you 1 free month of rental. So I encourage you, if the fact of life is this, I do not know whether the bill will pass, but I think highly likely the bill will pass. But one thing to negotiate now is if you're going to have a conversation with a landlord, talk to him about this. If you are an F&B and you have really a significant job, tell him about this, that the new bill will pass. Why don't we have an open conversation now? Let's talk about the 2 months. You'll have no cost incurred to you, and let's talk about this new 2 months. Okay, this new 2 months, clearly when we apply together, the government will give you back half the percentage of the 1 month, and you will not charge me for 1 month of rental. Can we discuss a policy to come to an equal gathering of this? Okay, I cannot announce more details until Ministry of Law pass, but this is where everyone is tripping up. So to clarify, about 2 months for commercial property has been announced. That is fixed. 2 additional months in a new bill has not been announced and will probably be only announced in early June. Okay? Now, moving on, let's talk about digital transformation and the digital resiliency. Now, for hawkers, I strongly recommend this. Now, obviously, I don't think we have a lot of hawkers here since they are all busy feeding us, and I really thank them for supporting. Without my nasi lemak, I cannot be talking to you guys here today. Now, for those of you who know friends in hawker, please ask them to adopt e-payment. Okay, I cannot imagine why until now they cannot accept e-nets or PayLah. Okay, the government of Singapore is going to give them 1,005 bonus just by adopting e-payment, and there is no service fee all the way till 31st December 2023. Okay, these are all the new policies announced. Okay, get them to adopt. I'm sure a lot of us at frequent hawkers will love this. Okay, so this is for hawkers. Now let's talk about this new digital resilience bonus that you guys have been hearing about. It's only applicable to food service and retail for now. It has not been announced. Enterprise Singapore will decide whether it will be announced and expanded, but it's only for food service and retail. So for those of you who are in my session today and in my class previously, do this now. Now, let's talk about how it works. First thing first, you need a base. Okay, the base is this. Whether you like it or not, you need to adopt PayNow Corporate and e-invoicing. E-invoicing is the Singapore government national initiative to get us to receive invoices by payment. It's free and you get an additional bonus. Okay, so you need to do this first. If you don't use PayNow Corporate and e-invoicing, you don't even qualify for the grant. Okay, so you do this one first. Now let's talk about what it means. Okay, so the digital resilient bonus is a one-time bonus on top of existing grants. It's a one-time bonus on top of existing grant. Let's give you an example. There are different categories, and the categories must go in this way. You cannot say, let me just use category 3. No, you need to follow in category. So now that your company, let's say you are a restaurant and you have adopted, say, the PayNow and e-invoicing, the first thing you do is this. For your accounting, HR, and digital ordering, adopt these 3 solutions. Not either one. All 3 must adopt. What is accounting? Digital accounting, such as MYOB, Zero Online. These are it. HR payroll, Telenox, Payboy, digital ordering. Some of this have existing PSG grant. You can use the PSG grant for it. Okay. Once you adopt, the government will give you an additional $2,500 as a bonus. Essentially, it will be free for you to use this solution. Then you can go to category 2. Category 2 is digital present. Either online food delivery, so if you're already at Grab, you're already qualified, or e-procurement. Okay, you get 2005. And last but not least, which is the most unclear one, data ops. Okay, the government only say data analytics. I'm sure more details will be announced soon by Enterprise Singapore in end June. I think that if you adopt some form of analytics software, the government will give you. In total, if you are F&B business or you are retail business, this applies for both, you will get an additional $10,000 if you adopt all 3 solutions. A pretty good incentive for you to digitalize. Okay, so think about this in the digital resilience bonus. Now, for employers thinking about hiring individuals, they have enhanced the SG United jobs. I will only talk about this briefly because the schemes are very complex, and SG Tech is very fortunate to have a talent committee. For those of you interested in knowing more about talent, please drop us an email and we'll talk to you guys about it. Now, under the mid-career scheme, who is a mid-career? A mid-career individual is someone above the age of 40 years old, and they must go through some form of reskilling program. Okay, originally the government was paying 20%. Today they're going to pay 40%. Okay, that means that by hiring a mid-career individual to your organization, say a CFO, somebody senior itself, you're going to get the ability to get a 40% salary support through this scheme. PCP is one of them, followed by other forms of CET Center, such as SME Academy and PNT program. Now, there are many of this program. If you guys are really interested, SG Tech is here to facilitate this process in terms of PCP and the other programs. Okay, so happy to talk about more. And this applies when you want to hire individuals. And last but not least, in the Fortitude budget, we have the Foreign Workers Levy. The Foreign Worker Levy has already been waived. So there are 2 parts in the foreign workers part. First thing first, for those of you who have work permit and S-Pass, as you know, EP pass holders have no levy or rebate. so it doesn't apply. If you're a work permit holder and S-Pass holder, for the month of April and May, you already do not need to pay the levy. There will be an extension, 100% for June and 50% in July. On top of that, 2 months of rebate has been paid out, $750 for April and May. There'll be an extension, $750 for June and $375 for July. Okay, this is the foreign workers levy. So this is the Fortitude budget. This is the main 6 areas that Minister Heng Swee Keat has announced. Before I take your questions, I want to talk about this new normals, or what I call the realities of the new normal. Just 3 points to take note from majority of global research. I think first thing first is this, remote working is probably going to be a new normal, if not already is. So do not think of the fact that end of circuit breaker equals a yay, let's go back, or even the worst, oh yeah, till we find a vaccine, everything will go back to normal. There is no more back to pre-COVID. The world has changed, and it's important that SMEs today change as well. So 3 things in the remote working that you guys need to think about. First thing first, you need to be comfortable organizing a workforce in distributed manner. You know, your employee can be at Punggol, can be Hougang. The ability to meet physically is going to be reduced. The need to meet digitally is going to be increased. Adopt the best practices. I stress this again, especially on accountability. I know a lot of SMEs are still expecting their employees to sign on Zoom at 8:30. Hi, morning boss. I think that is really very silly. I ask you guys to have an open mind to think about how accountability can work in the new normal. And most importantly, stop assuming the old ways will return. The old ways will never return. The world has shifted, okay? Effective remote working is the new reality. Now, production and capacity, just in time to just in case. A lot of us have been optimizing our costs to just in time. You know, we are cost centric. Moving forward, a lot of times our supply chain is going to change. We now need to move into a just in case situation already. What happens when that production line stops? Or let's say you're importing and selling something. What happens when that line of supply has stopped? This is the new reality. Excess capacity, or what I call going to abundance, will become the new norm for corporates. Already, we are seeing a lot of corporates stacking up on resources in the manufacturing space to provide even more lead time. You need to adopt technology for efficiency, and basically the concept move away from, oh yeah, you know, let's say you're a retail outlet and let's bring in the minimum amount of quantity MOQ required. Instead of cost optimization, it will be value loss optimization. What happens when this product is suddenly disrupted in China and I cannot import it anymore? How much value I left on the table? It's a whole new mindset to think about in terms of just in time to just in case. I have a fellow adjunct faculty here, Professor Francis, who will be great in sharing this more if you guys consult him. And last but not least, online commerce is the norm. I'm not even assuming that you guys don't have online commerce. Online commerce has already been a norm. I'm now talking about contactless commerce. Contactless commerce is going to be the new future for us. We are going to innovate new ways so that we can deliver goods and services without physical contact. Of course, do not get me wrong, there is a value for a restaurant setting, a high-end dining restaurant with excellent service. There is a value for Singapore Airlines, there's a value for that. But we are going to actively think about how we can deliver something, especially the mainstream item, without any form of contact. And this can apply for service as well. Yoga classes are now done on Zoom. It might be a new norm. And I love it. You know, classes are done quickly. I can quickly go and bathe. I don't have to use facilities. I don't have to travel. This is going to be a new norm. Plan around this for the fact that there will be future circuit breaker. There will be more transformation, and you need to find ways to deliver your product and services, ideally without contact, in the new thing. You know, returning to the old normal is no longer a destination now. I want you guys to stop. You know, we cannot think that we're going to return to the old normal. It's no longer a destination. Now, for all of us, reimagination is the new normal, and we have to embrace the reimagination of our SME future. All right. So thank you so much, ladies and gentlemen. It's been such an honor to share with you guys so many thoughts. I'm going to take a screenshot first. It's been an amazing experience. I'm now going to take your questions in the Q&A first before I look at the crazy amount of chat. Now, for those of you who are, you know, as you guys are doing this, please help me scan this QR code and do for me the survey link as well. Okay, let's move this around. Oops. Okay, my Q&A function has just, oops. Okay, just give me a while, guys. I'm going to stop sharing because my Q&A box has went crazy. Okay. Unfortunately, I cannot read all the Q&A questions, so I'm going to take them bit by bit. All right, just give me a while. The Q&A box on Zoom always goes a bit wonky for me. Okay, I'm going to flash out the screen again. Play this. Okay, let me take some of your Q&A question now. Okay, it's coming in very fast, so I will try my best. Are the service industry, which depend heavily on tourism retail space, applicable for, okay, first question from Randy. Service industry which depend heavily on tourism eligible for higher than 25% of the job support scheme? Now, the job support scheme is completely based on the SICC code of the company. A full structure is available on the Singapore government budget website. Now, service industry are very broadly classified, right? If your company SICC code is not in one of the tiered 75%, 50%, you are straight away defaulted to 25%. So long answer short, no, it doesn't matter what kind of business you're running. As long as your SICC code don't follow to the prescribed other basis, it is still 25%. Okay. Next question is this. Isaac asks, when will the landlord receive the grant and rebate? So the landlord do not need to pay anything for property tax. That's part one. The second part is the additional cash rebate to cover the 0.8 months or 0.64 months. No details has been announced when the landlord will receive it yet. The expectation will be somewhere in June, July, because that's when IRAS will announce how they're going to disperse the fund. So not sure yet how they're going to disperse the money. Okay. On rental, Joanne Chen asks, on rental relief for private property, you mentioned qualifying criteria is SME where revenue is less than 100. Is ownership a criteria as well? Based on the government prescribed notice, is not a current situation. As long as your company is incorporated in Singapore and your revenue is below $100 million, you should qualify for the rental relief, regardless of ownership. That is based on my reading of the regulations. For wage support, does it apply to EP holders? No, EP holders has no form of support. First thing first, EP holders do not get foreign workers levy already or rebate, and EP holders do not get job support scheme. Job support schemes are strictly for Singaporean and Singaporean PR. Next question from Kelvin. Can I get a recording? Yes, the recording of the session will be available on isolation.sg when we finish this. Paul asks, what is considered significant in reduction of revenue? Ministry of Law have not tabled the veil yet, so I do not know yet. I'm sure what's happening right now is a different industry association are providing them with what is defined as significant salary reduction. For digital resilient bonus, can business owners claim the bonus for Cat 2 if they don't Cat 1? No, it's quite clear. You go in a tiered order. You must do Cat 1 first, then Cat 2, then Cat 3. Next question. Sharon Pai, if company not SME in retail, can they also get the digital resilient bonus? No, the digital resilient bonus is only for retail and F&B for now. They might expand, they might not expand. We do not know. Next question, Sharon again. If an F&B SME already adopt some digital solution, do they qualify? I hope so. I would think so, but it was not very clear when they announced it. So I would hope so. Like if you already have some of this, I would think that you should qualify because they should not prelude people who already don't adopt digital technology. But more details will be announced by Enterprise Singapore in mid-June. In functional hours, digital resilient bonus, can business get one vendor to provide the 3 category services? Yes, no one is not clear enough. So you can find one vendor to provide all 3. If the vendor is already on PSG, you can get a PSG grant. Sure, by all means, go ahead. Paul asks, in our experience with PCP, very restrictive and do not qualify PCP. Paul, drop us an email, info@sgtech.org.sg. My colleague Zihan from the Secretariat team will be able to answer you on PCP. The talent committee has been doing a great job in this area. For Alson asks, for the digital resilient bonus, must the 3 software under category 1 be adopted together? I would think that you can adopt part by part, but you need to show that you have done all 3: accounting, payroll, and e-ordering. Kelvin, In this new normal, do you recommend to reach out to potential when many people are unreachable? Yes, I would think so. There is a hidden economy happening right now. I would think strongly it's a good time to reach out to the individuals. How to ensure receipt-generated knowledge with contactless delivery. I think that's a very interesting challenge. A lot of the logistic players have come out with some new solution, such as I think some of the more cool technology company have done this thing called Telegram, whereby they have an application on Telegram whereby when they drop to your house, they take a picture and it gets sent to you, and then you press yes to acknowledge. It's quite cool, and I strongly adopt companies to adopt such solutions. Are tenants more eligible for the e-invoicing grants? Everyone is eligible for the e-invoicing grant. You get $100 by just going to einvoice.gov.sg under IMDA to adopt the e-invoicing solution. How does a global market affect Singapore? How does a global market like US and China affect Singapore currently and the future? Very good economic question. You know, our largest trading partner is China, followed by European Union, followed by the US. The fact that the confidence level of the Chinese market is going up is good. But at the same time, China, you know, back in the 2008 recession, the first thing that the Chinese government has done is call Weixi, which is crisis Weixi Guangzhou, which is focusing on your internal domestic market first. So even if you are exporting materials or items to the Chinese market, I would think that the Chinese customers are more willing to buy from internal Chinese sources before a Singapore sources. So the Singapore economy will not be able to withstand a prolonged downturn in our key trading partners. So this is where a very short-term affection of the Singapore market will happen. Happy to talk more with you if you drop me your email. Hey, hi Sun Hui. Just curious, why F&B will revert back to 50% from June onwards when we cannot accept dine-in? I would think that government would think that because you're F&B, you can do takeaway and Singaporeans are still eating the same level. So this is why they dropped to 50% versus say a cruise ship or MICE industry. Really, you cannot do gathering of people, right? They really cannot do an overseas trip. I think that'll be the reason why. Billy So asks, if my company resume operation on 2nd June, will they still, yes, you still entitled to the 25% job support scheme. Whether you resume operation or not, you are still a Singaporean company, it's still the job support scheme. Ian Low asks, our SICC is not in tier 1, but we are in IT that built technology for the tourism. Can we appeal for higher tier of JSS? Based on my personal understanding, appeal has never been successful so far, but that's just based on very anecdotal evidence. By all means, today we are all in the isolation economy and the new normal. I strongly recommend you to go to iras.gov.sg, click on my text mail and send in the appeal to IRAS. No harm trying. Ian, as well, if you can do it, let us know. Drop us an email at info@sgtech. We would love to know whether your appeal got successful or not, because this is helping us get industry feedback and survey. Fresh grad trainee support packages. Cinda asked me, the fresh grad trainee support is under the SG United traineeship program. You can reach out to SG Tech to talk more about it. I don't talk more about the jobs package because it's actually very unclear right now about how they plan to roll out the SG United jobs initiative. Okay. Yo asks, will the grant be automatically dispersed to the property owner from end July? I would think so. IRAS will announce more detail in end June. Lynn asks, for privately owned shophouse, which is a unit share between business one and another essential one, how will the waiver work? Now, in multi-factored property whereby you have a property share between, say, a split shophouse half-half, I would think that it's up to your landlord to decide. This is why the government keeps stressing that they are not interested in engaging in the discussion between the landlord and tenant. They pass a law so that all the rebates they give the landlord should be passed down to the tenant. But in a complex scenario whereby you sublease a shop into 4 different parts, they would like you guys to work out on your own commercial terms yourself, because it's very hard for government to decide on the different position of it itself. All right. Thank you so much, Lala, dismissing this. Okay, Samantha Tan asks, IRAS reviews annual value of property every year in the month of August. With real estate price, will there be a case where landlord pass down the property tax and the AV goes to the fork out the difference? Yes, very possible, because annual value will change for sure. It's a very possible situation here. Okay, thank you. Oh, sorry, I might have dismissed something. Will rental relief applies to new tenancy? Very good question. Your new tenancy must enter, the rental relief applies only to new tenancy enter before 25th March 2020. if you decide to enter a new rental agreement on 1st April 2020, you do not, all of this policy that I share with you do not apply to you. Okay, hope that helps. Done. Dismissing this. Alison asks for digital resilience budget bonus. Does it apply to some IT vendor or IT vendor with specific solution? More details will be announced by ESG in mid-June. Cannot comment on that. For Director, Sanjay asks, for director and shareholder drawing less than 100K a year, there will be job support, salary support based on the tier scheme. Once again, the 100K is based on last year net assessable income on your IRAS submission of your individual income tax. Okay. Jason Hua asks, if F&B already have accounting software, can I still apply for the digital resilient bonus? Once again, we will talk to ESG and then we will see how it works. Landin asks, my commercial tenancy will end in September. The property tax is 100%. Does it mean as a landlord, I'm required to pass 100% a tenant, meaning I need to pay 2 extra months? Landa is very, very up in the air. You have no cost involved for the first 2 months because the government will give you the property tax rebate and the 0.8 or 0.64 months of rebate. The additional 2 months, I think we should not speculate. We should wait for a Minister of Law to table the bill before you decide whether you have to pay additional income to the landlord. Okay. Colin asks, any criteria for the vendors? I do not know yet. Sorry. Please talk to SG Tech, Go Digital Committee. I'm sure we get information as soon as possible. How will the Fortitude budget support for the startup be dispersed? Well, Joanne, the startup doesn't really affect anything, right? As a startup, you are still a private limited or EPC company. You still get a JSS. And if you're renting property at Air Raja under the JTC would have given you 5 months of rental waiver already. The new thing they have announced for startup is a 1-for-1 financing scheme to qualify investors. And that is basically, if you can find new investment, you get a 1-for-1 matching. But as always, it's only for a deep tech company. A lot of the startups that we experience are consumer tech company. The 1-for-1 finance scheme will probably not apply to you. Okay. I'm going to dismiss this. HDB rentals are on which month? It's up to HDB to decide. I strongly ask you, if you are taking a HDB property, call HDB hotline and ask them to let you know because it changes depending on location. Yes, Isaac asked a very good question that no one has asked. You own your own property, will you get the tax rebate? Good news, the government will give you the property tax rebate and will give you the additional bonus as well. So it kind of really supports you. So for those of you who owns your own property, it works both ways. All right. Beppe asks, are offices used by F&B full rebate? It really depends. I give you an example. A lot of people are on traditional shop houses in HDB, first like those mini marts, first floor and second floor. It depends on the classification. For shop houses on the first floor is used as commercial. You get the 100% property tax rebate. The second floor, a lot of it is actually called residential zone. So you don't get a single cent of rebate as well. So it doesn't matter whether the residential is used for office, storage, or for kitchen, because it's all based on the classification. So Beppe, I recommend you to check your classification of the place that you're using as offices, whether is it commercial or commercial offices, and then commercial offices will drop to 30%. So it doesn't matter which industry you are, it all depends on the classification itself. Mary Long asks, is there a deadline for landlord to pass the tenancy rebate? As of right now, not yet, but I would think the bill will be passed to make sure that you actually pass it down. Because don't forget, through the COVID-19 bill, your tenant can send you to arbitration court if you are not passing down the rebate. Okay. Will you be able to elaborate more on the SG United skills? I really wish I can. I don't have more details on the SG Skills United training. If you are interested, please drop an email to SG Tech. Billy asks if the rental rebate should be 2 months. I think you should be expecting about 2 months if you're commercial. If you're office and industrial, that is 1 month. And the additional 2 to 3 months, you should really be expecting only after the bill is passed and once more detail is announced. Jason asks, if the startup company hire new staff, are we entitled to the JSS? Yes, it's provided the JSS. You can get both, yeah. If you send the staff to PCP scheme, you get the PCP support of 90% of the training support. But you, at the same time, for the month of June, July, August, you still get your JSS support because don't forget that is based on CPF. So you get both the salary support scheme. As a sole proprietor registered company, we are not eligible for JSS. Yes, if you are a sole proprietor and you hire employees, your your employees get JSS. It's only the sole proprietor or the partner in a partnership do not get it. Okay. And last but not least, Ben asks, we are a software company and help fresh fruit. Any advice for us? Ben, I'm sorry, I'll leave you to send an email to SGTech or myself to discuss this more, and we're happy to talk how we can help you. And Soon Hui, in the event that landlord already extended some rent relief prior to this later budget, will the joint sharing be on top or contribute to existing? Once again, it's up to you. By law, he's mandated to give you about 2 months of rent support, but it doesn't mean that he has to give you. That's point number one, and it's up to you to discuss your landlord whether you want to discuss. Soon Hui, I recommend that if you have a good relationship with your landlord, appeal to them to ask for more lah. We all need to survive together. Lynn asks, after the waiver rental, rent still needs to be paid, but the tenant could not pay. Does the landlord require to give installment? Lynn, yes, the COVID-19 bill states that the landlord, the tenant in the event of drastic uncertainty can suspend the payment of his rental to you. It's a suspension, and you cannot charge interest. You cannot charge late payment fee. For more detail of this, go to isolation.sg/past webinar. Scroll down to the COVID-19 bill. Our fellow member company, Jonathan, has given a very good overview of that obligation. And for property lease directly from JTC, the rental rebate will be given to you because it's a government agency. Okay, thank you so much. Ooh, we answered all the questions in a record amount of time. Okay, let me see the group chat. So many interesting things. And I'll just give me a while to take a water break. PowerPoint, Isaac asked, will the PowerPoint be sent to you? Yes, the PowerPoint is already available on isolation.sg. You can download it already. Mary asked, if an employer promotes an employee and cut pay during a period, what actions can employee? I really don't want to give legal advice, but technically speaking, Mary, if you cut the employee's salary without due reason, the employee can go to MOM and make a claim against you. For shareholder and director not contributing CPF, there are no payout available for you. Simple as that. You have to be director fees are not considered JSS. The conditions are steep so that only employees with CPF are considered. So if you are a shareholder and director not contributing CPF and paying yourself a director fee, you have no form of salary support for you. Okay. I cannot read the first two questions because my Zoom Q&A box. Oh, finally it works. Yes. For companies who do not belong to essential services, the JSS under Fortitude Budget, 75 or 25%. 25%. Jade asks, of her forefathers. Yes, I think it's amazing how much years of reserve we have built. It's truly amazing and lucky for us to have this. Zhongchen asks, do you have any good case study for best practice accounts in a remote working environment? I cannot really mention it, but right now here in the chat, but I think there are many good case study available over the internet, and SGTech will be happy to share more in another situation. Lynn asks, does the JSS apply for company that started in February? It doesn't matter when's your incorporation date, as long as you make CPF employment contribution for the month that JSS is applicable, you get the JSS support. Lydia, will the correct slide of 34 be uploaded? Yes, I will make changes after this. Thank you. For companies that don't belong to essential service and non-be open, wouldn't that mean JSS is 75%? No. The government has kind of take a very hard and fast loose approach on this, whereby if your SICC code is not in, because they just classify you as others, and the assumption is that you can operate remotely. So if you think that you are a service that cannot open or cannot operate and your SICC code is not under tier 1, tier 2, 50%, 75%, you should send an email to IRAS to explain your case, and hopefully they will let you qualify under the JSS at 75%. Okay? Where can we get training provided? Wayne, hi Wayne. can you drop an email to info@sgtech.org.sg? They will be happy to share with you. As always, my pleasure, everyone. Let me read through this thing. Digital. Oh yes, actually Ken, so sorry. The slide 34 is correct. Do not qualify if 100. I'm so sorry. Yes, thank you so much, Ken, for clarifying this. Yes. Sorry. If you guys need to reach me for something, this is my email. Nan asked me, who should I contact if the landlord do not pass out everything? So Nan, two things you need to do. First thing first, watch the past webinar by Jonathan from Kakao Wong and Partners on isolation.sg to know your rights first, and then after that you need to speak a lawyer. Okay. Suhe, my pleasure as always. Love doing this. I hope it was useful. Guys, I really hope this was useful. I'm going to stay here for another 2 minutes before we can end this session. But such a great session. I cannot advise you on. Okay, so Kishore asked me, is it the right time to invest in bonds and stuff? Sorry, I cannot advise you on the financial investment position if I'm not your license holder. So I'm not here to. I cannot advise anyone on investment decision in the context of a webinar. Sorry about that. But you want to drop me an email, I'm happy to discuss with you on other things. Joanne, as always, thank you so much. I really hope you enjoy this. Ken, thank you so much. Yes, try to maintain my looks as good as possible. Trying to sleep more to look good. Billy, thank you so much. I hope it was useful. Sri, you built a portal for remote learning. Drop an email to SGTech. I'm sure we can talk about how we can support you in your project. Lynn, thank you so much. I hope it was useful. Everyone, I really hope you guys had a great time. It's such a great thing. And yes, can we open the office? Sika, the approval thing, Sika, I strongly recommend you to call the government hotline to get clarification on that. I think it's very concerning. Sia, thank you so much. As always, very useful. Clarissa, thank you so much. Roland, thank you so much. Chinpyu, thank you so much. Any more questions? Thank you, guys. Hey, do the survey, okay, guys? Please do the survey. Okay, do the survey. Thank you.